Let's talk to Ryan Littlestone. He's a trader and analyst at ForexFlow.live. Morning to you, Ryan.
Very good morning, Nick.
Right, let's talk currencies. A lot going on in the world at the moment. Let's kick off with the cable, the US dollar against the Great British Pound, the hourly chart. What are your thoughts on a sort of technical and a sort of fundamental basis?
Well, on the technicals, we've got some semblance of a bottom in play at the moment. As you recall from the last couple of weeks, we've been talking about cable. I was looking around at the 139, 138 area for sort of a temporary bottom, perhaps. And we saw that. We saw that again on last week after the US CPI data. 138 was pretty much the low. And once again, it's a story of dollar weakness. I've been looking at it from the point of view of getting some pound weakness from Brexit talk and all those shenanigans. But once again, the dollar's the other side of the coin, and we're seeing that in effect as well.
Right, so in terms of the week ahead, we've obviously got Bank of England meeting this week. What are your thoughts there? What would you do if you were Mr. Carney?
Well, this is going to be a tough call for him because he's prompted it, the other day by saying that they possibly expect rates to go up faster than many expect. Yeah. So, the market's taken a leap on that. But the pound hasn't traded up as high as I thought it would do on that at all. But then the market's a bit susceptible about Carney because he's been here before. He's prompted higher hikes or sort of faster hikes, and
the unreliable boyfriend, as I recall, or words to that effect. So obviously this is probably one of the most difficult currency pairs to trade. Some would say that they're all difficult to trade. Which way would you be right now?
Right now, me and the team here, we had a great week last week on the US CPI report. We faded the move. 138 was a level I bought at, rode it all the way up to 139.20, I think was my last exit. So we've got a good range here. Up towards 142, I'd be a seller, maybe even 141, depending on the reason why. But down towards 138, I'm potentially a short-term buyer, but I'd look to keep things quite tight. I'm not going to give a lot of room to these trades because it is quite volatile at the moment.
Understood. Okay, well, let's move on to your second chart. Dollar yen on an hourly, a clear downtrend in play. What are your thoughts here?
Again, the dollar can't find a bid anywhere.
Yeah.
We saw CPI last week on Wednesday, and I wrote just before that the dollar's going to get hammered whatever happens to the CPI report, because that's the trend we're in at the moment. And lo and behold, once again, CPI numbers came out. They were pretty much, they beat expectations, but were pretty much unchanged on the month before on the year-on-year reads. But it keeps the Fed on the hike path, and the dollar rose, 20, 30, 40 pips, and then got absolutely hammered again. And, when you're in a market trend like that, you can't fight it. There's still people out there calling for dollar yen at 120, 130. People have got to wake up to see what's right in front of them. The chart's saying, this is a rally seller. You pick your levels up above, towards the 108, 108.50 area. That's one level I'll be looking at. And you hit those rallies, and you can almost shut your eyes and do it. But, it's not going to go in a straight line as we often speak about. So, we've got some semblance of a bottom here at 105.50. Yeah. We're above 106. So those are the two sort of numbers I'd look at if you're going to be looking at longs. But if they break, then the trend resumes.
But it's extraordinary. We've had commentators come on and say, key support at 110, 108.5, 108, and all these key support levels keep breaking.
Yeah, well, I had those levels on those same levels on the chart as well. They were key levels. They define the range for the whole of 2017. But when you test these levels, often, and you keep knocking on the door, one day the door's going to open and off we go. And, here we are again. But what you then look at, if these were strong levels on the way down, then, as often is the case in trading, these levels become strong on the way back up. So You don't wipe them, you don't ignore them. Those are the areas you look at. If you get a test and it holds, then you go short into them.
Well, that's one of the main premises of technical analysis, right? Broken support should turn into very, very strong resistance. So,
that's one of the things I always look at. From a 5-minute chart, a 15-minute chart. If you're just scalping it, you look at the broken support levels, broken resistance levels, and you look to see if they test again. Because what that gives you, more often than not, is a confirmation of that break. If a broken level tests and holds, then you can get in again and go with it.
Because, just to reiterate, whether you like technical analysis or not, those broken support levels are where people are going long the market as it enters, as basically the buyers are looking to exit, they're trying to break even, and that's why it turns into resistance. That's what the textbooks will tell you.
And you also got to remember that you also get stops sitting there. So people who have traded that break or gone with a break, they'll stick their stops just above those levels. So when they do break, you can get a further push on, and that's why you keep your trades tight against those levels.
Ryan, on that note, we've got our trading hats on this morning. Thank you very much indeed for your time. We'll talk to you same time next week. That's Ryan Littlestone. Thank you.
Cheers.